U.S. President Donald Trump is once again trying to rattle markets. They're really not being rattled today, at least this time with a threat to impose 100% tariffs on Canadian goods if Ottawa makes a deal with China. Joining us now to walk us through this latest development in the trade war is Jeff Mahon, former Deputy Director at Global Affairs Canada's China Division. Jeff, thanks very much for joining us today.
Happy to be here.
Is this another taco?
Well, I think it's a little more complicated than that. I don't think this 100% tariff threat is going to come to pass, just given the sheer magnitude and havoc that it would wreak on the American economy. But it does send a signal that the United States is quite upset and that it is looking for Canada to play ball with it.
And is it realistic what he wants? He doesn't want any kind of a deal with China for Canada. Is that realistic? Is that possible?
Well, let's make sure we get our terminology straight here. What do we mean by a deal? So what the Prime Minister has put forward is a strategic approach with China. It's not an actual trade deal. And the CUSMA Article 3210 that restricts our ability to be able to enter into free trade agreements with non-market economies is subject to a particular type of agreement, the FTA that would be registered, for example, through the WTO. The type of deal, or more the strategic approach that the Prime Minister was able to reach with China was about resolving our current trade dispute. And indeed, I actually think that this would go a long way in setting a precedent for the Americans to solve some of their concerns that they have with China, concerns that Canada shares.
Does it feel that this deal, or no, sorry, the agreement they have, it's so easy to say deal, I apologize, with China, is this a bit of a jab at the U.S., maybe to get them to sit up and take notice that Canada needs to be taken seriously when it comes to CUSMA?
If it is, I would say it's an auxiliary approach. I think the real thing that we need to do is find a new modus vivendi with China. China has a very unique economy that is different than ours. So it creates a lot of frictions when we trade with it under the current rules. So we need to find a new way to engage. And that's exactly what the strategic approach does. It shifts the focus away from trade towards investment. And that gets at the overcapacity concerns and also the threat that a cheap deluge of Chinese imports would do to undermine the fundamentals to lift Canada's nascent EV sector off the ground. So I actually applaud the strategic approach because I do believe the government has set a novel precedent for dealing with China in the 21st century. And I think other countries will take note of how this works, including the United States, and it might actually move us into a better relationship with China. So no, I don't think it's a jab. But it should also have the president wake up and see that Canada is doing things in the Americans' interests, although it might not necessarily look at that way on first blush.
And just going back, how do you feel it eases the concerns about overcapacity and similar issues?
Well, overcapacity is a concern because of the impact it has on prices. So if we put a restriction on the amount of goods coming in, final products, electric vehicles, then that's going to manage the supply and demand dynamics here in the Canadian market. So those overcapacity, which essentially would be a deluge of supply that pushes down prices, that undermines those signals for investors to be able to make long-term decisions to build up our own sector, are going to be distorted. So it's going to now mean that Canada can actually have a chance of continuing to build that out. And I think this fits with the broader notion of a more strengthened continental supply chain, which is ultimately what Donald Trump's looking to do. Yes, he wants to reshore vehicle manufacturing to the United States. Canada's showing it's looking to open up a third way to be able to keep the North American automotive market sound by managing these overcapacity concerns.
And do you think Canada can negotiate on a level playing field, any kind of deals or possibilities with China? Is that realistic, or are we negotiating from a weaker position?
Well, I would frame it a bit differently. The way I see this is, what is Canada's strengths in its negotiations with China? It is that Canada is a G7 country. We're a liberal market democracy. We have the same type of economy that many of our partners have. And so therefore, we're sharing the same types of concerns that they have with China. And we're also tied at the hip to the United States. So if we're able to find a way to work with China to manage those concerns, to be able to both trade and invest in a more amicable manner, then I would actually see the Chinese would view that as a win. and that that is the leverage Canada has, is actually what many people see as our weakness, being so close to the US. But this is what makes it such a delicate balance for Canada and the Prime Minister to engage with China, to manage those concerns, via his variable geometry, but in a way that also doesn't poke the American bear.
And any concerns that we're dealing with China right now when they appear to be having a little bit of upheaval? There's been a bit of a purge in the military by Xi. Any concerns about that spilling out further?
Oh, there's always internal political intrigue in China. That's what's going to happen when you have a non-democratic political process. So this is part and parcel of Chinese system. I think getting into the details of that would be beyond the scope of discussion. But I don't think this is the kind of thing that we need to be worrying about right now as we trek through the immediate challenges ahead of us.
So in the end, it all kind of comes back to Canada and the U.S., though, with CUSMA and figuring that out.
Absolutely. Our relationship with China is framed by our relationship with the United States. Unfortunately, we've got a difficult relationship with the United States right now, but they're not going anywhere, and nor is Canada. So we're going to need to find a way to deal with each other in terms that can that work for both. Canada does need to diversify its economy. That doesn't mean substituting out the United States. It means shifting the proportion of our exports, and ideally through growing our overall exports, which would in turn mean growing our economy. So that I think is what the government's focus is, not bumping away America from us.
Okay, we'll wrap it up there. But Jeff, thank you very much for joining us. Appreciate it.
It's my pleasure. Thanks for having me.
Jeff Mahon is Director of Geopolitical and International Business